Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
Okay, welcome to The Wealth Flow. My guest today is Dana Samuelson. He is a leading voice in precious metals for 43 plus years of market experience. He's the founder and president of the Gold Exchange. He is a former president of the Professional Gunsmithist Guide. Dana is also a commentator. He has been shaping the industry for decades. He trained under James Blanchard III, who is a key figure in re-legalizing the private gold ownership in the U.S. He has also been featured on Forbes, MarketWatch, and Fox Business. He's helped anti-counterfeiting task force, working with Homeland Security and Secret Service to combat fake bullion. He is also the president of a 25-year-old firm with a A+ Better Business Bureau rating and is got a near perfect Trustpilot reviews as well. So with inflation and geopolitical instability and the currency devaluation dominating the news cycle, I'm happy to have you on, Dana.
Hi, Keith. Thanks for having me. It's a pleasure to be here with you.
Yep, not a problem. Looking forward to our conversation. Always good to have somebody on representing and kind of giving us the landscape of precious metals and kind of how that all falls into today's economy, as well as, from an investment standpoint, how it can complement what we invest in. So I'm looking forward to today's conversation. But I do love to start with really your background, where you grew up and what eventually led you to this profession within the precious metals industry.
Well, thanks for asking. I had a pretty remarkably good childhood. My dad worked for Shell Oil, and by the time I was in third grade, they put him in Manhattan at their Manhattan office. I was actually born in Midland, Texas, and went to a few other places along the way, but I spent my formative years in northeastern New Jersey, Bergen County, which is one of the more affluent towns in the country, actually counties in the country. And got really lucky. It was beautiful, hadn't been overbuilt at that point in time. Just a wonderful childhood and for grammar school and high school. And then I ended up going to college in Virginia to Washington and Lee University, which was a great college to go to from 76 to 80. I graduated with a German degree, which was unusual. I was going to be a psychology major, and I decided to ditch that after my sophomore year. And the only way I could graduate with my class was to roll into German, which I had a background in high school with, to get the right amount of credits. So then I got out of college in 1980. Inflation's sky high. Interest rates are sky high. The economy is upside down due to oil shocks, and we've got hostages in Iran. My brother had been out of school for about 5 years ahead of me. He had gone to work for a company in Houston, Texas, that was a big precious metals trading firm. He was a rare coin expert, actually. A numismatist is actually the nerd word we use. And I ended up getting a job with his company in Houston in their vault. handling the merchandise because they were overrun with physical silver sellers. Getting out of college in 1980 with a German degree was like getting out of college with any degree in 2009 when the great financial crisis was on. Nobody was hiring anybody.
Yeah.
So I got lucky because I could be trusted. So I spent 2 years counting, shipping, and weighing the physical gold and silver products we all deal in. If it was a restaurant, I was right at the kitchen sink. And then I got my lucky break. We were selling a lot of vintage coins and Mexican silver coins to Jim Blanchard's company, Blanchard and Company. And Jim was the guy that realized when we depegged gold and the dollar in 1971 under Richard Nixon, the dollar would lose purchasing power. And between 1933 and 1974, it was illegal for U.S. citizens to own physical gold because we went off of the gold standard in 1933. Jim championed the re-legalization of gold ownership and got it done under Gerald Ford in 1974. And then people asked him, okay, now that we can own it, where do we buy it? And Jim said, well, I'll sell it to you. So he started a precious metals national mail order coin company, which by 1980, during the first big boom in precious metals, was the largest mail order coin company in the country. And I got an opportunity to go to work for Jim in 1983 as a vintage coin appraisal trainee. So I literally spent 2 years in a room, and they bring us bags of vintage silver dollars from the 1800s, 1880s, 1890s, or silver coins from the 1940s, Walking Liberty half dollars, or U.S. gold coins minted from 1838 to 1933. And I learned how to appraise them based on their state of preservation today, the condition they survive in. And when the boss would go to coin shows or trade shows, I started going up to the trading desk to be a substitute trader. I got a pretty good head for numbers, and I'm good with people. And I eventually got an offer to go to the trading desk. And from 1985 to 1989, I got to spend about $50 million of Jim's money with the industry, and I got to know all the industry players. And today, a couple of my friends and colleagues from back then run U.S. Mint distributorships. So I'm very tight with the industry on a high-level basis, going all the way back, 40 years now. I finally got the courage to start my own business in 1998, American Gold Exchange. And we've built ourselves up from, literally working out of a bedroom in my house at first to an office. And, now we've got a national presence. We've been doing business now for, 27 years. And all I wanted to do was be my own boss. And I knew from working with Jim in the 80s that you've got to give your clients a chance and take good care of them. So I wanted to have competitive pricing, honest, sound advice, and just really try to help people, because when you do that, it comes back to you. And our industry is not regulated. Anybody can be a precious metals dealer. We have opportunists that come into the space, and we have really aggressive dealers that, overcharge, in my opinion. And if you don't take good care of your customers, the one thing you end up doing is keep looking for new customers. And my fundamental premise was, if I get a client, I want to keep them for life to the best of my ability, because that's really where you build a business. And that's what we've done. We've just really tried to be as honest as possible, honest all the time, straightforward, reliable. We say what we do and we do what we say. And it's been our secret to success, is just being straightforward with people and helping them in our space, as experts. And that's my story.
Yeah. That's an incredible story, and kind of timing wise, just really interesting that, kind of how you got into it, and then being able to work under Jim. And I can't believe that, not that long ago, it was illegal to, have gold, so to speak. I mean, that's to me just is crazy. I think of that really wasn't that long ago,
No, I mean, gold has been currency and money for most of man's existence. And it went all the way till 1933 when we got into the Great Depression, and Franklin Roosevelt wanted to print more money to stimulate the economy. But you can't print gold coins easily as you can print paper dollars. And that's why he called the gold in, made gold illegal to own. And we went off of, gold as currency then. And then We backed the dollar by gold after World War II when the dollar became the world's reserve currency. And that lasted until 1971 when we printed more dollars. So we had equal gold amount in Fort Knox. And we've been off of the gold standard ever since. And now we have record debt. What a surprise.
Yeah, exactly.
Right?
It's amazing how that happens.
Yeah.
So, couple questions, maybe to start out. Just really curious on. So your firm still deals in coins as well, like rare coins and that kind of thing. And maybe can you explain maybe a little bit on that side of the business as well as what is that a viable business? Do those continue? Obviously, it is, but I'd love to hear just a little bit more about it and what makes a coin precious, and kind of some of the things that someone should look for when they're considering making a purchase like that.
So we deal primarily in gold and silver coins, but there's also copper, nickel, and those are the two other primary metals: pennies, nickels that exist going back to the day. The U.S. Mint made coins from 1793, and in gold they stopped making them in 1933.
Okay.
Silver coins have gone all the way to the 60s, 1964. And a lot of these coins survive today. Millions and millions were made, but we've had meltings over the years. We've had attrition through wear and loss. So the survival rates, especially in mint quality condition, for most of these coins are very tiny compared to the number of coins that were made.
Okay.
Some coins are rare in circulated condition because not that many were made and most of them were used. So I can give you a couple of examples.
That'd be
the
great.
Carson City Mint was open from 1870 to 1893, 23 years. They made $20 gold pieces. They didn't make that many because it was a regional mint. It was easier to just pull the metal out of the ground where they found gold and silver deposits in Carson City than haul it over the mountains by wagon train through Indian territory to San Francisco, where the big mint was. So San Francisco made a lot of coins for the region because they had the big gold deposits. But Carson City was a much smaller mint. In 1870, they made $20 gold pieces for the first time. I think they made about 1,800 of them, 1,750. And today we know that maybe 60 or 70 of these $20 gold pieces exist. Even ones that are horribly worn are worth $40,000 or $50,000 a coin today because it's one of the rarities in the U.S. $20 gold sector. Now, by the same token, during the Roaring '20s, the mints made millions and millions of $20 gold pieces. And a lot of them never got out of the banking system when the crash hit in 1929. They went overseas in European bank trade payments and have come back to the U.S., in the 70s, 80s, 90s, and even now in the 21st century. So there's, 800,000 of these that we know exist in mint quality today. So they're not rare. They trade very close to their gold value, even though they're in mint condition. So how many were made? How many were used? How many survive today? What the popularity of them is? All of this different things affect the value of a rare coin. So it just depends. In 1933, the U.S. Mint made 450,000 $20 gold pieces, but the mint never released any of them. There was a guy in Philadelphia who conned someone at the Philadelphia Mint to swap out, we think, 20 or maybe 40 of them, of the 1933 dates for earlier dates, because the government melted all the 1933s once Franklin Roosevelt made gold illegal, and they had the right amount of weight. But these individual coins started popping out in the marketplace in 1936, 1937. King Farouk of Egypt bought one for his collection. A Secret Service agent decided he was going to confiscate the ones that were out on the market because they were never released by the mint. But the U.S. sent King Farouk his by diplomatic pouch. Right?
Yeah.
So his coin has been deemed the only one that's legal to own. All the others that come onto the market are confiscated if they come onto the market above ground.
Oh, really?
Or out of the black market. That coin today was just offered on Pawn Stars the other night
Hmm.
for $30 million. It traded at auction for $19 million about 5 years ago. It's the
Wow.
only 1933 $20 gold piece that's legal to own. So if anyone wants a collection of every U.S. gold coin, that's the only one they can get, right?
Wow. Yeah.
Yeah. So
That's
there's
interesting.
stories like that, and I've got hundreds of them. I could bore you for hours with them.
Well, it's an interesting thing for sure. And so really kind of the rarity, those that were less circulated, those are going to help drive value. And so tell me a little bit about, I guess, gold coins now. I've heard a couple different things when it comes to coins, versus maybe investing directly into gold, just gold bars themselves. What's your kind of take on all of that? If you're an investor out there and you're looking to obviously take something, maybe you're going to take this one into possession. So not maybe a huge deposit of them, but what is the best way to hold gold in coins or in bars?
Well, basically, the sovereign minted 1 ounce gold coins that the U.S. Mint, the Canadian Mint, the Austrian Mint make today are basically just round bars made by sovereign governments' mints, as opposed to square bars made by refineries. And, you go back to the 70s, and when people first wanted to buy gold, they really could only buy bars.
Okay.
Right? When gold was re-legalized for ownership. But South Africa made a 1 ounce gold coin called a Krugerrand. Then Canada started making a gold maple leaf in 1979. The U.S. got into the business in 1986. So there's a lot of choices that you have when you want to buy physical gold that's just gold for gold's sake. You're going to pay a small premium for manufacturing, making sure the specs are exactly perfect, because these are precise weight and purity units. But we've got a growing but modest problem with Chinese counterfeits. And refineries make 1 ounce gold bars, but the designs on them are pretty plain looking. And they tend to come in kind of little baseball card sized blister packs where the bar is sealed inside plastic inside of a cardboard holder.
Mm-hmm.
Whereas the mints that make the 1 ounce gold coins, you can handle them. They come in tubes of either 10 or 20, depending upon the mint. And the mints have, since 2016, have started to increase the intricacy of the design that is stamped into the coin to make it harder for the Chinese to replicate. And the refineries have not done the same thing with their bars. So if you're a novice investor today seeking to buy gold for gold's sake, if you don't deal with a legitimate dealer that knows what he's doing, if you go outside of the dealer community to pawn shops or to private sales or to some auction platforms don't police their product lines, you could get a tungsten gold plated bar that you think is 1 ounce of gold or 10 ounces.
Yeah.
But the mints around the world are doing things to combat that. I don't know if you can see this or not, but this is a Canadian silver maple leaf. And down on the bottom of it, there's a little frosted maple leaf. It's very tiny.
Yeah.
Get it real close. I don't know if you can see that or not. There it is. It pops up. It's that little white element.
I do. Mm-hmm.
Yeah.
Yep.
That literally says the date inside of it. And then inside of that's another date. I mean, you got to look with a jeweler's loop to see it. And the Chinese just can't replicate that. Now, if you're a novice and you see a fake one, you might not understand that it's fake. But a dealer like me can see them from 1,000 miles away. It's not a mint-made product.
Okay.
Which is why it's important that if you're in the market, you deal with a legitimate, long-standing dealer who knows what they're doing. And this problem came up when I was president of the Professional Numismatists Guild in 2016, and I helped to establish and create the Industry Anti-Counterfeiting Task Force that today works with Homeland Security and Secret Service to interdict shipments of spurious, Chinese counterfeit coins and bars coming into the States. Yeah. And we've intercepted, over $100 million worth of product over the last 8 or 9 years that's, could have found its way into mainstream investors' hands.
Yeah. It's crazy how good they get when it comes to some of the counterfeit stuff. I mean, I just I look at even Rolexes, that kind of thing, and I mean, they've got various degrees of them, right? There's some
Right.
that are just like the one that that the lady has in a little shop, and then they've got like really kind of I forget how they distinguish them, but they're going to cost you more. They may cost you $1,000 for a fake one, but it's a really 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 good fake one, and it's like it makes it so similar to what you're saying with going to a legitimate gold dealer. It's hard to buy anything on the kind of secondary market or something that is potentially used or an auction. Because you really don't know where it's coming from and whether it's authentic or not.
Right. Which is why doing business with the trade is really where you go to make sure you get legitimacy and a reasonable buyback when you want to sell something, right? If you have an established relationship with a dealer, that comes in handy when we're in a stressful market situation. Like we've gone through a couple of big demand waves since the great financial crisis, COVID, and again, now that metals are hitting record highs. There's a lot of people looking for metal, but if they buy it from the wrong place, they might get a pig in a poke.
Yeah, yeah. All right, and so tell me a little bit about, maybe if you could give the audience kind of an outline of, maybe the two main ones, the gold and the silver, and give maybe your opinion or, with obviously all the knowledge that you have within this industry, kind of where you see things going, which of the two you feel are, something an investor should take a look at, and, just anything that you can tell us, I guess.
Yeah, so gold and silver hit record highs in 2025 going into 2026. We had just an enormous percentage gain last year, driven by several factors, but this has been a slow build that led to really a boiling pot. So we had a pot of water on the stove that's really been warming up for years, fundamentally driven by debt across the globe. We had $7 trillion of debt in 2015 as a country in the U.S. By 2015, it was $17 trillion. In 10 years, it doubled. Now it's 2026, and we're up to almost $40 trillion. We've doubled again. So what's going to happen in 10 years from now, right? That's been one of the primary leading drivers of gold, which on average, if you go back 25 years, averages 7, 8, 9% annual price appreciation. It's lumpy. You can see periods of time where it's greater than that and periods of time when we have a loss on the year. When the great financial crisis hit, gold went from $800 an ounce to $1,900 an ounce. It did exactly what gold is supposed to do in times of economic turmoil, which is offer a hedge against financial uncertainty. Now, when the world's economies regained traction and everything stabilized, gold fell back to about $1,000 an ounce, where it base built. And now we're at $5,000 an ounce. Well, something happened after Russia invaded the Ukraine. We threw Russia off the SWIFT bank transfer payment system. We seized their assets, and we basically weaponized the dollar. So let me back up just a step, because there's another fundamental thing that you need to understand. Central banks around the world, like the U.S., had gold coins that they made for decades. And when we went off the gold standard in the 30s, a lot of those gold coins that were in circulation ended up going back to those banks. Between 1950 and 2010, central banks around the world that had gold coins hoards going back to the 30s and earlier dishoarded themselves of most of that gold. But following the great financial crisis and the debt explosion, the printing explosion, central banks around the world started buying gold. Now, these are the most conservative bankers in the world. And on average, between 2011 and 2021, they bought 500 tons of gold a year, which is not meaningful other than it's a big direction change for the most conservative bankers there are. The mines annually make about 3,500 tons of gold. Well, after Russia invaded the Ukraine and we weaponized the dollar, central banks doubled their gold buying in 2022, 23, 24, and now in 2025, they've bought over 1,000 tons of gold a year, even at their most, the highest price we've ever seen in 2025. Because if you have gold in a vault, it can't be seized or sanctioned. It can't be weaponized like the dollar can be. So a lot of the BRICS countries that are trying to get out of the dollar don't really have a good alternative except for gold. So we've seen a big demand wave of gold, and that started to really impact the price in 2024 when gold got over $2,000 an ounce in earnest for the first time. When Donald Trump was elected president, it got to be about $2,900 an ounce. And most of that's because of cumulative central bank gold buying between 2022 and 2024. And then what happens? Trump becomes president and he throws a monkey wrench into the global trade order through tariffs, right? And he's disrupted the global economy as a result. And he's also given the rest of the world a reason to think maybe we can't trust the U.S. as much as we have in the past because we've pulled back from helping to defend Europe over the monetary costs of that. We're going more towards a hemispheric dominance as opposed to a global dominance. I mean, look, going into Venezuela to pull Maduro out. I mean, who saw that coming 6 months, a year ago, right?
Right. Exactly.
So the world went on a gold buying spree over tariffs and uncertainty last year, which is really what helped to turbocharge the metals from about 3,000 gold to $5,500 gold in January. And silver, tends to run hot later in a gold cycle. It's been $50 an ounce twice, 1980, and again during the great financial crisis in 2011. But gold had led the way throughout this whole last couple of years when gold took off from 2000. Silver finally played catch up last year, and it's a much smaller market. And we've seen huge waves of demand, it's particularly out of India, where a lot of the people in India, the most populous nation in the world, don't have the wherewithal to buy an ounce of gold, but they could buy a couple ounces of silver pretty easily, right?
Right.
And if you got 1.3 billion people and they all want a little, well, that can really help. Plus, there are ETFs. And when a market goes into momentum, you get fear of missing out, right? And you get pile on. So we've seen the metals take off from October of 2025 into January of 2026, where gold went from 4,500 to 5,500. Silver went from 50 to 120. And now we've gone through a correction phase where we just gone too far too fast. And now we're in what I call a consolidation phase, which every market goes through on a way up, when buying exhausts itself and then people take profits, they sell it back down. So right now we've got gold basically in about a $4,850 to $5,200 range, and it's stable. We've got silver trading between about $70 and $90 an ounce, and the bias is moving higher right now. We were leaking a bit, and now we've got military buildup in the Middle East over potential military action against Iran due to their nuclear activities. And that's helping to buoy metals up towards the high side of their trading range right now and may cause them to go, further higher still. We'll see. But how we measure, what is a better value for people is simply using the gold to silver ratio. How many ounces of silver does it take to equal an ounce of gold? If you go back historically, over the last 25 years, the ratio runs pretty much between about 40 and 80 to 1, where 40 parts silver or 80 parts silver equal 1 part gold. And the middle of that's 60. So when the range goes 80 or higher, which it has been, that means silver's cheaper relative to gold. And when the ratio's lower, below 60 to 1, that means silver's more valuable relative to gold. So that's how we measure, if people want to put money in or add additional monies, where they might get a better return. And until this big silver run, silver was undervalued by gold. It was, typically over the last 4 years, it's been 85, 90 to 1. And it even got to 120 to 1 during COVID for a very brief period of time. And it got to 104 to 1 last April. And that spurred an Indian influencer to tell people, hey, it's holiday season's coming up in the fall. Instead of buying gold for Diwali this year, why don't you consider silver? And then guess what? We tariffed India in September 50% over their buying oil from Russia, supporting Russia in the war against the Ukraine.
Yeah.
And India went on a silver buying spree. That's really what helped to drive the silver price to record highs in the past 6 months is an Indian buying spree, the likes of which we've never seen before. And
Wow.
if you're an Indian investor and you had gold, you could use the gold for collateral and bank loans, but you couldn't use silver. But now they've changed the law where starting next month, if you're an Indian investor and you want to, get some money out of your precious metals holdings, you can use silver as collateral too. And that's helped to buoy silver as well. So that's how we measure one against the other and how we make recommendations for investors as they're buying or selling. We look at the ratio. And I'm a chart nerd, so I look at charts all the time to see where resistance and support is, to look for value.
Okay. And is any of that information on some of your websites? I mean, where does one go to kind of look at that and say, well, what is now a good time to purchase it or not? What's the best way to
Well, our website, American Gold Exchange, or AMERGOLD, has the current metal price, the spot price as we call it. That's the unfabricated price for an ounce of gold or silver or platinum or palladium. And we have the ratios on our website as well. I have a YouTube channel where I put out regular videos discussing the current state of the market, where I am always doing chart analysis. And I have a LinkedIn page where I put charts up as well to show people, what we're looking at for support and resistance in the current market. So we can put those in notes if you'd like.
Yeah, absolutely. We'll put those in the show notes here at the end, and I'll have you kind of remind the audience at the end as well. Just curious. It's so interesting, that there are kind of, different guidelines that you can use to make sure that you're purchasing. But it's amazing also how just a buying spree in India. I mean, like you said, it's not a small population there, but just how that can truly drive up, the value. And so it's a fascinating deal for sure. How about on silver? Are there any applications with silver? I always hear, of course, on infomercials and various things, how, with data centers, with AI, with all this, that they're utilizing silver as one of the metals that will potentially help drive up prices. Are you seeing that in reality, or what are you seeing right now?
No, we're seeing that in spades. Absolutely. So silver is the most conductive metal there is on the planet, and it's an element. So it's not a product of two two molecules coming together. It's an element. So you can't reproduce it. It's the most conductive metal there is for temperature and electric current. Now, this is a 1 ounce Canadian silver maple leaf. I can hold it between my fingers like this and hold an ice cube, and I can cut that ice cube in about 5, 6, 7 seconds, just like that, through the temperature of my fingers transmitting into the coin.
Yeah.
That's how conductive silver is as a parlor trick experiment, right?
Yeah.
But silver is needed for conductivity. It's used in photovoltaic cells, solar panels. It's used in EVs. It's used in a lot of electronics. Samsung has come up with a battery for EVs. It was a prototype a year and a half ago that takes about 32 ounces of silver that can charge in 9 minutes and go 600 miles on a charge.
Wow.
Which basically cuts your charging time by a third and doubles your range. Now, I drive around the country a bit, and I don't see Teslas, in the middle of the highways, between big cities too much. I see them a lot around cities, but not too much long range trips, right? For this reason.
Yeah.
Well, Samsung just in October of 2025 invested $175 million into a closed Mexican silver mine to go directly to the source to secure supply lines for silver. And silver's become a critical mineral this year as a result. And last year, rather. The U.S. has deemed it a critical mineral. And this is material in the silver market. We've had China go to 2 different mines in Canada in December trying to buy silver out of the ground for $7, $8, $9 more than the market price to secure supply lines of silver. This tells you how critical some industries and governments think having supply lines of silver is, for the reasons that it's only replaced by copper, and copper's ability to conduct electricity and current are much lower than silver. Silver's not practical in, home wiring like copper is. But there's many places where you can only use silver to get the result you want. So that's a big factor in helping to drive silver higher in the future. And I think silver has the prospects to be, $150, $200 an ounce because of the supply and demand imbalance. Over the last 5 years, we've had a structural supply deficit where the world consumes more silver than the mines produce. So we're eating into the above ground supply, and that's going to continue. And the rubber kind of hit the road this past year where everyone realized, oh, maybe there's not enough silver to go around, so we better get our hands on some. And that's part of what's helped drive silver too and create a bit of a speculative frenzy.
Okay. And then as far as, but there is a dramatic difference from a weight standpoint as well, right? So, silver obviously a lot heavier, not heavier, but, relative to value, I guess you could say, right?
Yeah. It takes a lot more silver to equal the same amount of dollar value of gold.
Right, exactly. And so, I know we did an example one time on the show of just, how much just a single coin or even just, one of the little tubes of metal of gold coins was, and how much of that it would have equated to in silver. And it was kind of dramatic. So for something to just throw in your pocket and head into the bunker, gold is probably the better choice of the two as far as being a little bit more mobile.
Well, that's why central banks are buying gold at record rates, because gold is much more compact. It's much easier to store. It's much easier to transfer real value. And that's really what it is. It's a wealth transfer metal, where silver potentially is hard money in a crisis. If you want to, if you think the world's coming to an end and you want to have a little spending money that beats $1, an ounce of silver, can't be beat.
Right. Yeah, makes sense. Now, what about, so there's obviously ways, let's maybe shift gears a little bit on to kind of how you can invest in gold and silver, kind of the options. We talked a little bit about the various coins that you can buy, as well as, buying maybe non-stamped, I guess if you can maybe explain the various ways of being able to take possession of it, but also I'd like you to elaborate on ways that you can buy, maybe larger quantities if you're not somebody that's going to be comfortable with, which I probably wouldn't recommend above a certain amount, storing it at home in the safe. It'd be nice to have some, but maybe once you get beyond a certain amount, you want to keep that somewhere very safe. So you want to maybe go through some of those options with the audience.
Sure. So for investors in gold, I really think the 1 ounce sovereign minted coins are the best way to go, as opposed to bars, for the reasons I've already discussed. And that's US, Canada, and Austria. These are the 3 most popular flavors, most widely traded, competitively priced, and for individual investors, easy to sell when it comes time to liquidate. Every dealer like myself understands what a US Gold Eagle is, a Canadian Gold Maple Leaf, or an Austrian Gold Philharmonic is. They're vanilla, chocolate, and strawberry of the metals markets. Right. Okay. Now in silver, you can buy 1 ounce silver coins as well. If you're buying in bulk, the mints issue them usually in boxes of 500 ounces per box. They're about the size of a pair of boots that you get, not shoes, boots, but it's going to weigh about 40 pounds. So if you have 1,000 ounces, that's 80 pounds, in 2 boot boxes. You can also buy 100-ounce silver bars, which are not counterfeited by the Chinese. It doesn't pay for them to really counterfeit those at this point in time. They're much more economical in size because it's compact, a little bit cheaper to buy for premium because you're only paying 1 minting charge for 100 ounces versus 100 minting charges for 100 single 1 ounce coins. So those are the sizes that I would recommend for gold and silver, and stay on the mainstream. You can buy kilogram gold bars, which are 32.15 ounces. But if you get one that's tungsten plated with gold, you're not going to be happy at all. And they're about 140 grand per bar right now at these current gold prices, right? So that's why we like the 1 ounce coins. They give you flexibility when it's time to sell as well. Now you can also invest in ETFs, buy gold and silver on paper in ETFs, GLD and SLV are two of the most popular ETFs. That's just a representation of gold on paper. You have a tighter buy-sell spread because you're just trading a paper contract, basically, and the pricing is tied directly to the metals price. So they make it easy for investors to own gold on paper. I use them to try and harness price movement when I think the market's going to go higher, because it's easy for me to do it in my IRA, right?
Okay, yeah.
But I don't like there's nothing like holding the physical metal. You want to control it. That's what physical metal's all about, because what gold has that virtually no other investment has, and silver to a degree too, is no counterparty risk, right? It's an asset unto itself whose value isn't contingent upon another party to a transaction, the other side producing a result. Like your audience are real estate investors, right? So a lot of you have tenants. Well, if your tenant doesn't pay the rent, you have to. That's your counterparty risk. But if you own gold or silver, you eliminate counterparty risk. ETFs technically have some mild counterparty risk. They're supposed to be backed by physical, but we don't have transparency into them to make sure that they're really doing that. But there's been no problems with them so far. You can also invest in mining stocks, which are the companies that actually pull the gold out of the ground. And they tend to do well when the cost of production is much lower than the actual price on the street, which is the environment we're in now. So you can get leverage to a rising gold price in mining stocks, but you have to be an expert on the deposit that's in the ground and the company that's producing the metal out of that deposit. And there's a lot of them, and I'm not a mining stock expert. I go to other people for that recommendation myself. And they're volatile, so they can offer some real price swings both on the way up and on the way down, even if the gold price is relatively stable, depending upon what's going on with them. So those are the typical ways that you can invest in precious metals, depending on what suits you. But I'm a physical dealer. I like owning physical gold. I take some of my hard-earned savings and I put it into an asset that won't depreciate like paper dollars will. Now, real estate is a great investment for inflation protection, because they don't build houses like they don't, you can't print houses like you print dollars either, right?
That's right.
That's why gold is good. But what precious metals give real estate investors is liquidity in times of trouble, right? So what happened in 2008, 2009, 2010? Well, housing prices skidded and a lot of investors wanted to get in, but banks wouldn't loan money, right? I mean, Elon Musk might not have got a loan from somebody in 2010 or 2011 because bankers tighten up. So what do you do? If you have precious metals, you can always raise cash. And it's a good hedge against financial uncertainty. So having some of your assets, 5 or 10% in precious metals, is a great way to save money outside of depreciating paper dollars, and in the event of a trouble in the markets, give you liquidity if you need liquidity. And, buying gold in 2000, owning gold prior to 2008 and trading it for real estate in 2011 or 12 was a great play. And I actually did that myself.
Did you really?
Yeah.
Wow.
I was able to actually quadruple the value of the real estate that I bought relative to the gold that I owned, because the gold doubled and the real estate fell in half, right?
Yeah.
You've got to time it right. And when it's the best time to sell gold is the least time you're going to want to do that, because the wheels are coming off the bus economically, right?
Right.
But if you understand relative value, and I love real estate myself as an investment vehicle and a wealth building vehicle. I own real estate for that reason, because there's nothing better than have somebody else pay your mortgage.
That's right. Yeah.
Yeah. So I love real estate for that reason. And gold and silver can enhance that position that you have if you play the cycles right.
Yeah, that's a good point. Yeah, that's interesting. And, it does make a whole lot of sense to be able to do it. And I too think kind of taking physical possession of it seems to be an attractive way to do it. Just making sure it's secure, obviously, but having physical, it just feels better because you can see it. That's kind of what I like about real estate.
I sleep a little better at night knowing I've got some. And if you want to store it, having some of it at home is okay, but you risk theft, right? So you got to be careful there. We have storage facilities we recommend around the country that are kind of few and far between, but they're professionally run by dealers, usually mint distributors, who run their own businesses out of these facilities that are good ways to store metal in bulk. And some of them will loan money against the metal that they hold for you. And you can get cash loans pretty quick because they already have the collateral. It's not a whole process of being vetted and all your financial statements and everything. And they've got the metal, you sign it over to them, they loan you the money. But they're they're in business for a profit, so they're not going to charge you really competitive rates on a loan. But it's easy to get money against them if you are working with a company like that.
Yeah, so that's just another option if you've got something like that in storage. So, Dana, this has been great. If we could maybe share with the audience again, kind of the best way to find out about how they can get involved, how they can order stuff, and then of course, if you'll want to review your YouTube channel and everywhere where somebody can just find out a little bit more. If listening to this episode, they're thinking, this is great, I'd like to find out more. How can they find out more?
Well, our company is American Gold Exchange. We're out of Austin, Texas. Our web address is amergold.com. We have live, online, transparent pricing for the most widely traded, competitively priced bullion items, like I discussed. We have a YouTube channel where I put out regular updates. That's just American Gold Exchange Austin. Just look for my face, and it's hard to miss. We're also on X and on LinkedIn under American Gold Exchange, or AmGoldX on Twitter, and American Gold Exchange on LinkedIn. And that's where we do most of our posting of charts and things in the meantime. Our email is info at amergold.com. And if anyone just wants to send an email to info@amergold.com, we can email you a PDF of our Getting Started guide, which is a very basic guide to the things I've already discussed, the products that are best for clients to own. Because if we help you, we actually are helping ourselves. And that's our whole business methodology, is to help people, in our space. Phone number, if you want to call, is 800-613-9323.
Perfect. All right. Well, I've got two other questions I ask every guest. One would just be any advice you would give somebody who's maybe just starting out in their investment journey.
I think it's important that you have some skin in the game to pay attention to an asset. I'm friends with Robert Kiyosaki, who's a gigantic gold bug. And there's an epic story where he was out to dinner with some people and they were talking about Bitcoin. And all of a sudden he got on his phone and was paying attention to it for about 5 minutes. And Robert, what are you doing? Well, I want to learn about Bitcoin, so I just bought a little. Because if I don't have skin in the game, I won't pay attention to it. And I know gold has gotten fairly expensive, but if you've never bought any precious metals, silver is not that expensive. So, put your toe in the water, buy a little silver, go through the process of actually buying some, have it shipped to you, get it in your hands, see how the whole process works and how it feels and whether you think it's appropriate for you. But if you have a little skin in the game, that's better for you. What was the other part of the question? Sorry, I get carried away sometimes.
No, I think you answered it. It's just any advice you'd give somebody who's maybe just starting out in their investment journey. And I couldn't agree more that, having skin in the game, you'll start to learn. And I think that goes even beyond the gold and silver and, precious metals.
Right. So, find a dealer that's either local to you or, we're happy to help anyone that we want to help. But I'm a member of the Professional Numismatists Guild. We're the leading organization of dealers in the country. Look for Professional Numismatists Guild member dealers. There's about 300 of them around the country. So they're around. We tend to offer the most reliability in the space.
As far as American Gold Exchange, is everything from a transaction standpoint typically done through the website now, or how is there a physical location to be able to go to, or is it primarily, I would imagine, on the web?
Well, we have an office in Austin, Texas. I have 4 account managers I've trained myself who help individual clients. We're consultative in nature. Sometimes there are inequalities in the marketplace where one product is more pricey than it should be because there's not enough of it and there's too much demand. while another product, same line, silver or gold, is lesser price. We can help you wade through some of those issues and, answer any questions you have. And that's really what our strength is just helping people answering their questions. Because for most people, this is a new process for them. They don't understand it. And we're very patient. We answer any question, happily. No question is too dumb or too complicated for us. We'll help everybody as we'd like to. So if you have any questions, just call us and ask, and we're happy to try and help you. You can order online, but if we have specials, which we have sometimes, we can't always publish them online because they're not big enough to offer on our website. So we call those pocket deals that we get. So if you have a relationship with one of our account managers, that'll help you in the future, especially when things, are really in demand, or especially when it's time for you to sell.
Yeah, makes sense. Last question for you, just a book recommendation. Doesn't have to be gold or silver related, certainly can be, just something you've read that's been impactful.
Well, one of the biggest problems we have in the world today is just way too much debt. And when politicians who like to make promises control the printing presses, that's when we get a lot of debt. And I think the best, most reasonable person to understand big debt cycles and explain them where we all can understand them is Ray Dalio. And he's got a book called How Countries Go Broke, the Big Debt Cycle, that he's just put out this past year, which is fantastic. Now, I bought a much bigger volume of this about 6 or 7 years ago. And he goes through every country that's accumulated, debt to GDP that's over 100%. And that's where the US is right now. And what inevitably happens is you get into a death spiral where you start to have to print money just to pay interest on the debt. And the US is approaching that point in our debt cycle. So it's important that you understand these things. And I think Ray explains it better than just about anyone could. So I highly recommend this book. Yeah. Because if we lose the dollar as US investors, we're in big trouble financially.
For sure.
I'm not saying it's going to happen, but we're headed that way.
We're headed that way. Yeah. And you previously outlined kind of how our debt just keeps doubling, and at a really an alarming rate. So, no, great recommendation. Appreciate that. I have not read that one, so I will have to get my hands on it. I've done his Principles, which I thought was really good. And so looking forward to that recommendation. Dana, really appreciate you being a guest on The Wealth Flow, and I think we will call it a show. Thank you so much.
Thanks, Keith. Appreciate it.
Yeah, thank you.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.